we are live. Just taking time to just say hi to everyone. I am now on my way to France, Paris in particular, and I missed my train. So I missed my train. I have to go on to the next one, which is at 12. So a little bit late. We are supposed to catch the 10:24 a.m. flight, the 10:24 a.m. train, and then genius here kind of got confused because I thought it was going to be 10. I thought it was going to be 10:42. So we woke up really early, and end of the day we thought that it was 10:42. So I thought I was going to be half an hour early to the train station, and ended up I was literally 10 minutes. It was 10 minutes before boarding time, and usually they only will allow you to enter 10 minutes before, because we at least we're a business premier, so you can go in 10 minutes before. But we had to separate two different Ubers. And there was no way that we were going to make it in time. Anyway, long story short, here I am, and we have plenty of time because I only get on the train like 1 hour later. So no, maybe 1.5 hours later. Just chilling at the business lounge, just having a coffee. I think these are lovely, by the way. These little cheese biscuits. Enjoyed London, and I'm just moving around Europe. So today's topic, we are going to be talking about are we going to experience a multi-year bear market? This question has been asked occasionally by the Premier Group as well. What happens if we go into a multi-year bear market? What's going to happen? How do we deal with it? So I think it's a very good question, because personally, we are all very new to the crypto space. No one can say that they've experienced multiple cycles unless you are someone who was in before the Mt. Gox period, right? So let's just say I was someone in since 2016. I have not experienced a bear market, okay? Because when I entered in 2016, the market was quiet, so it was, to me, just lacking volume. Then in 2017, by the way, I was in since early 2016, February to be exact. So it was nothing. There was literally, there was no altcoin ICO craze, nothing at all. Seriously, nothing. And I think at that time, Ethereum just came out not too long ago. Yeah. Then what happened was, Ethereum blew up only in 2017 February, right? Okay, so right now we experienced kind of like a very heavy correction that was very short-lived in 2017. That was when China started to ban, South Korea I think banned, or either that started to regulate on the exchanges. Then you had Japan doing the same thing. Every single financial governing body was looking in on the crypto exchanges. Okay, then somehow the market volume just picked up very aggressively at the end of the year. Okay, so we had that crazy 20,000 BTC that kind of carried forward all the way until a little bit into January of 2018. Then everything started dying. So now we're already in the month of September. We are 200 billion only, nothing exciting. And what's going to happen now? Like, everyone who was stuck, what do we do? Okay, so let's be very realistic, and I want to help those people who are stuck. Okay, like how to really get past it mentally. I think for those who have already kind of come to terms with it, it's good. You realize that, okay, this market is still very immature. Okay, sometimes the things that we invested, it doesn't matter who invested in. Let's just assume everybody just made a mistake. Everybody just got excited over various different types of projects. So what happens is that you invest into any project and you end up back holding. Okay, let's just say, quantum. I invested into quantum. Quantum was one of my biggest bags. Also became a back hold for me. But as I progressed in the space, I realized that I had to just be a little bit more active in my investing methods. As you all know, I'm always someone who loves investing in great projects. I have a very small allocation. I always recommend like five in my portfolio and I stick true to it, right? But even those five, I occasionally have to do a little bit of tweaking. So the question is, how many do I stay invested in, and how many do I actually trade, right? I mentioned quite a long time back that I like to have a portion where I stay invested and a portion where I trade. So that allocation has kind of changed as the months went by. So what has happened is, like, right now, instead of staying invested 70% of the time, I'm actually trading 70%. Okay, and 30% maintains in a very steady dollar cost averaging strategy. So how does the dollar cost averaging strategy work? Okay, let me give you a few different kinds of scenarios or individuals. We start with my largest demographic, which is the 25-year-olds to my 35-year-olds. I assume that you're either still in university, or at least you're almost probably finishing university. You have very little capital, so you have more time. So you tend to be a little bit more involved. Sorry, I kind of died there. Am I back? Okay, so the Wi-Fi here is a little bit off. I hope I'm okay. I noticed there's no questions. I'm not sure whether I turn on the. I hope you guys can hear me. So, okay. So what I said was the demographic. Yes, back to the demographic. So you have these folks, right? Who are in the 25-year-olds to the 35-year-olds. Okay, so you either have very little capital to a little bit of capital that you can kind of dedicate to the crypto space. Now, those who kind of put in quite a bit of their savings, especially into crypto, late. Okay, that means when I say late, means you're a 2018 retail investor. You just came in, you went in at the high. Okay, the good thing is that I can safely say, after really speaking to people, it is a lot for now. What's up, Malik? So it's a lot for now for you, but the thing is that because you still have a long way to go in life, that you could not have invested too much that you couldn't recover from it. Okay? Sup, Dennis. So if you were someone who was, say, 40s, in your 40s, right? And I know that people in their 40s will tend to be a little bit more conservative. They won't really go all in because it's the whole crypto space really is very new. No one in their 40s, especially they're very familiar with the stock market, will not be too crazy to go and dump their full-on savings into it. There are very few cases that you do read that they do leveraging. That means they borrow from the banks and then invest into crypto, and then after that they end up in debt. I think those are the extreme stories. I'm not saying they're fake. I'm just saying it could happen, but I think most people, from what I understand from speaking to people, especially here, they're very conservative. Yeah, right. So you see, now the thing is, right? Okay, so let's address one thing at a time before I get to that, right? So Malik, yes, I hear you. I understand that you invested 100,000 and then now it's 30,000. Now, I think that's already considered a bonus for the fact that you only lost 70%. There are people who have lost 80%. And the only consolation I must say is that I hope that you have stuck to the right allocations, right? Now, there's no right allocations. Unfortunately, this market has so much market makers, liquidity providers, exchanges that are all in on it, that want to kind of showcase their projects. You never really know which cryptocurrency is going to do well. Okay, but let me get back to the demographic. Don't break my chain of thought. So as I was saying, if you are someone who is the 25 to 35, right, and you invested a certain amount of capital, it's easy for you to regain back or to rebuild your portfolio again. you shouldn't be too concerned. Yes, I know you'll probably be invested in various types of cryptocurrencies because you never know, your $100 could turn into $1,000 or your $1,000 could turn into $10,000, right? But that market is gone because at the moment no project has enough liquidity or are not willing to pay market makers to move their tokens enough, especially when BTC is so volatile. And the only way that they can do it effectively is that they must have raised enough money previously. So we all know this. Okay, now we come to the demographic of people who are already working, who are a little bit more committed. Let's say when I say you're a little bit more committed, we have people who have put in 30,000 to about 100,000. Okay, 30,000 to about 100,000. Your portfolio has already dropped significantly in terms of US dollar value, and the only thing is that you have to bear in mind that why did you enter at that point? Because you definitely believe that there was more upside. You definitely believe that the Bitcoin price would double from where you were. Now, there's no way to say that that would have been a mistake or it would have turned out favorably because there was so much news that you have Mike Novogratz, you have your John McAfee, all fucking saying that the Bitcoin prices would have gone up to $50,000. That at that point, that was the part where you notice now the tone, right? They still believe in those kind of bloody projections, but they have a longer term time horizon because they knew how much they fucking affected the market. So you have people who were like, oh, okay, since it's the end of the year, let's go big, right? Let's go hard. And to be honest, I've never believed any of them. I respect them to a certain level. They may have a very good valuation model to assess these crypto projects, but to me, where is the actual adoption? We must always question ourselves. You have every right, like you guys, when you all come on stream, you ask me questions. You sometimes ask me. You play the devil's advocate, right? So don't forget these guys, Mark Novogratz, Tom Lee. They are running funds. They're running funds. They have such a long time horizon and so much in terms of um, and by the way their investor levels are different, all right? They only cater to AI and accredited investors, or institutional investors, right? It's not retail. So their investors know that, okay, this is my risk, it's only less than 10% on my portfolio, I'm able to take the hit. And then these guys come out and start talking at forums, and the retail market will be like, wow, this could be it. So remember I made an episode about don't be the dumb money, right? So this is kind of like where we're at, right? See, my content is to help you guys to become and start thinking like the accredited or smart investors. You see what I'm saying? Be more savvy, right? When you invest 100,000, make sure that, okay, this 100,000 is money that you don't need. It's less than 10% because this crypto space, right? Okay, I had this opportunity to speak to a trader who was from Goldman. So he says, why the heck are people investing even 10%? Why? Why would they invest in a space that has no way to validate the value? Okay, no way to validate how much revenue is coming in for certain projects. Why are people even putting in 10%, let alone even 5%? So it kind of got me thinking over and over again. And to me, right, because I'm part of that space, he's not, right? He knows what's going on, but he's not part of the space. You see, he's an equity derivative market, bond market trader. So he's very used to the traditional way, and we're talking about someone from Goldman here. So obviously his thinking is very different, right? He will cater to retail investors, but he will follow a strict guideline. So for us, right, we are so used to not trading in stocks anymore because the millennials don't touch the stock market. Right now, the millennials are only invested in crypto, right? Because of the fact that it's so accessible. Millennials love to do things on their own, right? So which boils down to, how are you going to stay committed for this bear market? How are you going to stay invested? And that is why having the strategies of how the traditional traders or the traditional fund managers, how they function, it's actually more or less the same, right? they always have a very good rebalancing every quarter or so, depending on how active the fund is. Of course, most of them rebalance every once a year. But because the whole traditional stock market, right, is so overvalued, but it's so stable to a certain extent that, and also for the fact that you also have the governments supporting the banks just in case if there's another whole financial crisis again. You know you have the governments coming in. They kind of know this, and there's a lot of pension funds involved in all these current traditional markets. No one is going to put in pension funds into crypto. I think there's always a certain allocation. I understand that in the US you can allocate a little bit into Bitcoin, Litecoin, and whatnot. But let's just talk about having a crypto portfolio at the moment. It's just very unheard of in general. I think I can probably ask anyone in this lounge. Very few have dabbled in cryptocurrency, let alone knowing what is Bitcoin. Okay? So my concern right now is for my audience. My concern now is to make sure that my audience starts to grow their portfolio very, very gradually and prep when the bull market comes out. Okay, so back to it. Your dollar cost averaging strategy has to come into play. Okay, for those who have invested too much too early, the unfortunate thing, there's two things that you need to do. You wait for the market to recover, for sure, or when I say for sure means that you have to only wait for the market to recover because you've already overcommitted too early. Second is to start planning and dollar cost averaging. You just have to do that because you just have to continue on your path to bring down the overall cost. The third one, which is very, very aggressive, the third one, and listen up, this is the third one that you probably want to follow, is you have to start trading your existing holdings, and you hope that it stays within a range that you can always buy it back. That's the only way, guys. That's the only way. Okay, so DCA, very straightforward. Salary comes in, a portion of that salary goes into dollar cost averaging on your existing holdings, or you can consider rebalancing it to something that is more solid, because by now, especially if you had already invested 100 grand, you would have already started to think which projects are still valid for me to continue my path. Two, you are going to wait for the market. That means you do zero because you have no more capital. You felt that you have been burned. You're happy that you can get back your capital, right? Which is very normal. So a lot of people will start cashing out at that point. Or you can start accumulating right now because you didn't really commit too much anyway. You're just accumulating right now and you're bringing down the average cost, right? So the trading part is just for those who are a little bit more active. They are able to dedicate a little bit more time to really be trading the market, right? Like I said, not everyone can do that. Even I can't even do that all the time, right? But if you can, coupled with a dollar cost averaging strategy into the right cryptocurrencies, right, that have the most developments and truly showing the best progress, and you can actually hear their names being spoken of, right? You're not seeing just marketing material. You're actually seeing them in your own country if you have that kind of opportunity. So from there, you start realizing, hey, you can, yes, okay, wait, hold on. Your value will still be obviously low, but your tokens would have been generating. That means you're just generating more and more tokens. That means you have to stick the course, right? You cannot, you, if you want to talk about stop loss and cut loss and all that, right? You must have known that before stepping in. You must have already known that by now. Everybody, I say, especially if you're new, you probably don't really know what I'm talking about. But if you're someone who has been in the space for 6 months to a year, and even 3 months, you would already know that having stop losses in place, unfortunately, it's a good thing at the moment. But at the time, to be fair, having a stop loss wasn't that fantastic because you would always miss out on that crazy upside. So let's come on, let's just be realistic. In 2017, stop losses were nonsense. No one would believe in them because you're going to be missing out on the 20, 30, 40, 50% gains, right? When that whole thing died down, everyone started, oh shit, let's start putting in stop losses. Let's make sure that we have we don't stay invested in any project. We don't trust anyone, which is fine, which is fair. I think that is good. But take note, when the whole market stabilizes, the very, very strong projects in this space, whether blockchain or they are just crypto in general, will do very well. And if you fail to stay invested because you are taking this, this your so you if you have the trading mentality, then that is your style. Stick to your style. That means you're only caring about your profit. You don't care about whatever project. That's fine. For me, I still believe, because I'm a practitioner myself, I still believe in these projects. I want to stay invested. It's my choice, right? It's my choice, my risk to take. And at the same time, when I stay invested and I do any dollar cost averaging strategy in whatever I recommend, it's my choice, and I'm just sharing that choice with you. Okay, so so now I will take now that I've already cleared that up already, right? So I want to answer some questions. So feel free to ask these questions. Ryan, will the bull run gonna come in 2018? Malik, the only piece of news that could really have some kind of bull run, China lifting their ban. Okay, China lifting their ban on crypto. I don't see that happening anytime soon. Bug may give it some kind of excitement, right? Because the bug is a big deal. The moment you have bug in, you start seeing the recognized institutions start to step into crypto, because at the end of the day, if you can make money from investors, why won't you want to make that money? Simple as that. I'm a bit worried about most of the altcoins though. I think only a few strong ones will come through. Slowly, spot on. You already know that. You've been on the channel for quite a while. You just have to identify those strong cryptocurrencies. Block half 2020. Yeah, you see. So I'm glad that you guys are taking a longer term time frame. You're looking at 2020 already, when the halving happens. But now till then, how much pain are we gonna have to bear? You know what I'm saying? Let's say, for example, you know that obviously a few people are actually controlling Bitcoins at the moment, right? And they're moving the price up and down, and people are desperate for yield. They go to Bitmex, they start doing leveraging. Some get it, some don't. And to me, the house always wins. It's just a matter of time before people start realizing that. And by the way, when I use leveraging, I'm very conservative. I use it as a form of insurance. I don't use it as a means to make profit, right? So when Lambo, when Moon, when told you so. Probably a little bit slower, Mr. K. Probably a little bit slower. So yeah, I mean, it's okay. You see, think of it this way. Majority of us are obviously feeling the pain. But let me ask you a question. When the market turns, who's going to benefit? Do you think that the new retail investor is going to benefit? Because firstly, you guys know more than any retail investor. You all know more. Experience counts, guys. Experience definitely counts. And if you think that that's it sucks to be early, okay, it sucks to be early, there's a benefit to being early, right? Those who are early enough, right, into this space are always making money. It is fair for the fact that those who were in since 2012, some who were in since 2010, they are benefiting. They paid the price when markets were tanking, and they had their multi-cycle bear market. Okay, now we are having our bear market, right? Because the crypto space has so many cycles of bear market that you tend to feel like, wow, it feels like shit. See, that's the whole idea, right? Either you're in the space as a practitioner building something, or you're someone who is wanting to have some skin in the game, but you're not fully invested, which is fine. Why do you have to be fully invested? There's always other derivative products. There are always other financial products out there that you can put your money into. Sure, it's definitely slower, not as exciting, but eventually the crypto market will also slow down. It's just that the market cap is so small, we can clearly say 200 billion is it's just a baby, guys. It's just a baby. The whole crypto market is 200 billion. 1 trillion, not a problem. Now, of course, there are of course crazy anticipations that the crypto market could be 25 trillion as of Mark Draper or whatever. But who will know? When the heck is that gonna happen? Okay? So I took a 20k loan for mining gear in 2014. I took a big hit, and all it does is get better if you're strong. Yeah. 130 USD Quantstem is 2 cents. Will they ever gonna return to their prices? Okay, Quantstem, by the way, you see, Malik, like I said, every single cryptocurrency had a nice boost, okay? Had a nice boost, and right now the market prices them at their current fair value. You see, remember one thing, the market is always correct. The market is always correct. Remember this in this video. Whatever you cannot remember, it's okay, but you have to remember this. The market is always correct. Because right now, everything is being priced on where it's supposed to be. Okay? The market is never wrong. Okay? If Quantum is 2 cents, it's supposed to be 2 cents. If Quantum is supposed to be at 350, it's because the market prices it at 350. If Pundiax is currently at 22 sats, that's where the market wants to price it. Not at fucking 10 cents, not at fucking $1. Because all these claims that I've always been hearing previously, and I'm sure you all know what I mean, when, oh, this to $1, this to $10, this to 100. Why? Why? Who decides that? Right? The market is the ultimate decider. And you just have to be there at the point, or you stay invested long enough, or you have a strategy in place to make sure that you're well positioned when it happens. That's all you have to do. Really, you can't control it, guys. Okay, you can't control it. As much as a lot of people think that, okay, the whales, yeah, to a certain extent they can move markets, right? They can move cryptocurrencies. Like as current cryptos are still very small, like 100 BTC 24-hour volume. Any signal group, right? We're talking about signal groups. People who are running it from their bedrooms, who don't even show their faces, can move those cryptocurrencies. Now, when the market cap goes to 1 trillion, you will see all these buggers get wiped out. You will see that they will move to shittier and shittier and shitty projects, right? That have lacking fundamentals and lacking volume. They are not going to be able to push it. It's happening in the current IPO space, which is the current stock market, by the way. It will happen for the next 10, 20 years. As long as crypto markets are available, it will always happen. Right now, you don't know how much you are benefiting because you are so early to the game. You are so early to the game that you don't even realize it. That's the sad thing, that I feel very, 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 very sad when people don't realize that, when they don't know how early they are in the game. They think, fuck, I lost. From 20,000 I invested, now it's fucking worth 5,000. I invested 100,000, it's worth 30,000. Take it as experience, guys. Take it as you fucking went to a financial university in fucking Harvard, in Oxford or whatever. People pay fucking 100,000, 200,000 just to be a fucking doctor. Are you saying that this experience that you're experiencing now is a pain that you cannot accept? Come on, man. Come on. If you really feel that way, you don't deserve to make money. You don't deserve to make money. Alright? So that being said, 2 minutes more. I'll take whatever questions and I have to stop the stream. So long-term view on quantum, bullish for sure. Allocation wise, less than 10%, because at the end of the day, we need to see the actual developers start building on it, right? But are they a good team? They are a good team. But will they, okay, so 2 factors. Do they have enough money to stand the test of time? I don't know, because no one reveals the actual current value of the cryptocurrency project at the moment. So I don't know. I really wouldn't know. But if they run out of money because of the value of Ethereum and Bitcoin keep dropping, then it's a concern. Okay, then no holds barred, I'm so sorry, probably Quantum won't make it. But I'm just saying that if they have managed their funding and they've hedged early enough, they will be able to maintain their operational costs for the next 3 to 5 years. That is kind of like enough time for something to come out, 3 to 5 years. Now, if it can come out earlier and the adoption really skyrockets for some reason, because of bug or whatever reason, then this whole space will boom. But I'm taking a conservative approach, guys. I'm bullish long. I've never been bullish short term, guys. If you have been, you can go and look at my older videos. I'm never a short term guy. I'm never a fucking next week this is gonna happen. Fuck. For fuck's sake, guys, grow up. ICX long-term view. Okay. Okay. Can I just be very, very fair? And I'm not hitting any particular project in particular, okay? Smart contract protocols were built just to fucking raise money. And I think you all read an article about these smart contract protocols having copying Ethereum's code almost 70 to 90%, just copying it wholesale. That means they don't really have the full-on developer talent to create their own smart contract protocol. The fucking purpose was just to mint coins, and then after that have their kind of business partnerships built on them, and then it becomes like a market making business. You know, it's not like they had the solid platform that they wanted to compete against Ethereum. They were just copying and just wanting to do a cash grab themselves. So look, could Quantum be guilty of that? Maybe. Could ICX be guilty of that? Maybe. Could fucking EOS be doing the same thing? Maybe. Look, guys, we always just be skeptical. And at the end of the day, we just put our bets on the horses that we think will win, either this season, next season, 3 seasons later, and we just stick it through. If it fucking just flips, if it fucking doesn't happen, we have to accept it. We have to be mentally prepared that this is not going to make it. But it's kind of hard, right? Because you're like, how am I going to stay invested but I don't believe in something? Or in the back of my mind, I know it may not work out. How the fuck do I stay invested? It's like right now it's so fucking easy to say, hey, I want to invest in Apple. You know, it's so easy to say I want to invest right now in Amazon. It's so easy because everything is established already. That's why upside you're not gonna get. You're not gonna get that much upside. But if you are someone willing to take that risk, right? You're someone to see. You're willing to be a visionary and say, fuck, 3 to 5 years later, I'm gonna still be here. You know what I'm saying? Then you have every right to boast. But if you fucking just came on the train like just fucking 2 minutes ago and you ride it, that means okay, you're lucky. You're not skilled. You're not someone who knows anything. You're just lucky that you listened to a friend, or you happen to read an article, or I don't know, like you managed to just get lucky, right? I have zero respect, but hey, money is money, man. Some people make their fortunes just being on the right train at the right time. Everybody wants to fucking be at the right train at the right time, right? So anyway,
Train 9024, the 12:24 departure to Paris is now ready for boarding.
guys, I really gotta go.
Please use
That's
the
my
boarding
train.
points shown on the departure sheet.
I'll see you in Paris, guys.
The
Okay?
12:24 train to Paris is now boarding.